Hello and welcome to AIM with EQ. My name is John Yarker, I work in the marketing department, and today I'm joined by Neal Foundly, investment analyst, who's going to explain to me how we invest in the alternative investment market, AIM, and how we put together portfolios. So Neal, what are the main characteristics of the alternative investment market?
So AIM is the alternative investment market set up in 1995 for particularly small companies, startup companies, fast growth companies. And it's become very popular. There's 956 companies quoted on there now. The thing is, with nearly 1,000 companies, you're going to get some, high-profile blow-ups. You're going to get some disappointments, but equally, you could get some stellar growth stocks. We've seen that. So, it is often seen as quite a sort of Wild West market, certainly compared to the larger ones. You tend to get so many of those in the market. A key aspect of AIM is that it provides the opportunity to invest in stocks that qualify for business property relief. Now, business property relief was set up by the government to incentivize people to put money into small and start-up companies. And providing the investment is held for over 2 years, then this can provide quite a shelter against inheritance tax. In fact, if you hold AIM stocks, then you're sheltered from inheritance tax as long as you hold on to the investment for more than 2 years and that it qualifies for that relief at the point of death. And that is very subjective. I mean, a lot of questions surround that, but HMRC will assess that at that point. So this AIM provides opportunity to invest in good quality stocks, and certainly within 1,000 stocks, there's in there a core good collection of strong stocks that we look for to include in our portfolios.
Now, in the stocks we include in the portfolio, what are the main characteristics of these stocks we're looking for?
So if we've got our bag of 1,000 companies, how do we select them? Clearly, the investors are looking to invest in the portfolio to mitigate inheritance tax. So it's very important that we look at the qualification for business property relief. Then, as I said, we really want to look at the qualities of the business model, and so the key question is: does the company pay a dividend? It might seem odd that, why has that such a big influence over us? But you can only pay dividend out of cash, so the business has got to be cash generative. It also sends a signal that the management recognise there are external shareholders. It's not all about them. It's not all about the family business. So dividend paying is a very important signal. And clearly we look at the balance sheet and the profit and loss account and all the other aspects of the accounts to make sure that there is clearly a good business model there that supports that payment of the dividend. Clearly as part of that, we look at the debt side of the business. Is it too indebted? Is the interest charge too high? And then lastly, we want our investors to be able to invest, but also divest if they wanted to take money out, whatever. So the shares have to be liquid. In order to be able to buy and sell, the company needs to be of certain size so that we can facilitate that. So the size of the company and the liquidity, the ability to buy and sell those shares is very important for us.
So once you and the team have identified the stocks that meet the criteria, how is the portfolio put together?
Okay, so we've got our stocks that we've selected using those criteria. That's fine, but as important in the process is portfolio construction. How you take the individual pieces and put them together so that they create a portfolio that's balanced and that produces the results that we want. Okay, so first of all, we did a lot of work to decide that what the correct number was. So we did a lot of work to find that 30 was a good optimum number. And what that number gave us was a strong balance in terms of risk. So we didn't have too much exposure to one stock or one sector or one area of industry. But also it provided us enough liquidity, when I was saying about clients need to be able to buy and sell, that we could facilitate that. So 30 stocks, but we then equal weight them. And by that we mean if we have 30 stocks, we have 3 1/3% in each. Why do we do that? The idea is to equalize the exposures. We could vary it, but it's at the end of the day, varying holding by risk is very difficult. If you equalize it, we found that has a very balancing effect on the overall portfolio. And then what we do is take them and we rebalance. What that means is at every 6 months, we take the profits on the ones that have gone up and we reinvest that into ones that have done less well during that period. This naturally takes profits over time, which is good, clearly as a portfolio, but leaves enough time for returns to compound up and generate a good return on the portfolio. This we found, again, it was worth, we did a lot of analysis, whether to do it for every year or every 2 years, but actually we found that doing it every 6 months gave us the optimum result.
Now, there was a rebalancing of the portfolio in January. How severe was this? How many stocks were included, for instance?
As it happens, there weren't many stocks that had to be bought and sold. One of the stocks had performed very strongly and it gave us a great opportunity to take profit. In addition to that, we review at the 6-month period stocks for inclusion or deletion. We included a new stock this time, a company called Hotel Chocolat. You may be aware of it if you've ever gone out to buy chocolates. It's actually a manufacturer of chocolate and clearly has the shops on the high streets with a well-known name. So it was included in the portfolio as part of the rebalancing process.
What ideas or stocks were removed from the portfolio?
So there was only one stock that sort of fell out of our criteria for investment, and that was a company called Impellum Group. It quite simply fell out of the size criteria, which we do assess on a monthly basis. I mean, we monitor all companies on a daily basis, but it has to consistently fall out of that basis and provided an opportunity for Hotel Chocolat that had to come up the rankings to be included.
Great. Thank you, Neil. That's all we have time for. We hope you join us next time, where we'll be catching up with the investment team and seeing how the AIM portfolio has changed in the next rebalancing. If you have any questions about the AIM portfolio or any other portfolios run by Equilibrium, please get in touch with us via the contact details at the end of this video. Thank you for joining us. Bye-bye.